Good morning, everyone. Hello? Hello? Oh, yep, I'm here. The internet is working well. Good morning, everyone. Welcome to the modern market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to ideally make some or a lot of money on the internet. Loaded up for discussion today, we have Bitcoin dominance rising to 60% as famous trader Cobie says Bitcoin is going over 100K no matter who wins the election. Next, Switzerland's largest bank, UBS, launches the world's first Ethereum-based tokenized fund. And finally, on the meme side of things, PNUT drops 50% after running up to $100 million market cap over the weekend after a series of Elon tweets. Things started to get a little bit weird over the weekend. We have the breakdown for you, looking back over the weekend as well as looking forward. We've also got the latest on price action on crypto and NFTs and a discussion on the FUD around recent centralized exchange listings and if they are too extortionate. Interesting conversation going on there between Coinbase and Binance. So stay tuned for that. Today, we've got Legendary and Sammy in the co-host seats. We're ready to get into it. But just a reminder, friends, nothing that we say here is financial advice. This market is so risky. So please do proceed with caution and exercise your own judgment. With that out of the way, Sammy, it is Monday. It is the 4th of November. How are you doing?
I'm good. My rec drinks arrived, so I've actually got a load of rec drinks now over the weekend to drink. And Jace was away, it's my partner, and came back to a fridge full of them. So he told me to get rid of them pretty ASAP. So I've got a lot of liquidated lime to drink.
That's not bad. It's not bad that you've only filled up a fridge. The photos that I've been seeing with boxes arriving is taking up more than just fridge space. So what, yours are just sitting in a corner?
That's part of them. So I've got that, and then the same's in the fridge that I need to kind of take out and put somewhere else. But yeah, it's racked up. But I saw some people had bought, I think, like 10 grand's worth of drinks, which would literally fill a garage. It's like a lot of them. I don't know how many units that is, but probably 100 units at 24 things. So you're looking at what, 2,500 cans?
Something like that. I'm going to be honest. I did spend more than $1,000 on rec drinks as well. So I don't know when they're going to arrive, but I think I've got a lot of crates on their way over. Not entirely sure where I'm going to put it, but got to do it. You've just got to do it. Did you not get a little bit of the Gary V vibe? Remember back, for the people who don't remember, in 2021, Gary V sold a book. And if you bought the book, you got an NFT. And people were buying crates and crates of this book. So it sent it to like #1 on the New York Times bestselling charts. I was just seeing all the pictures rolling in from all the rec drinks buys and all of these crates turning up. It's like, obviously there's something going on beyond just buying the thing, right? Like people are expecting a coin attached to it, or some type of allocation. Did you not get that vibe as well, Sam?
I think, yeah, there has been hints and links to that, but also people who aren't familiar with crypto have been like, is this some sort of Herbalife scheme? Like you're an investor and you're also buying the product? Like what's going on here? But yeah, there is method to the madness. There is method to the madness. So I think it's okay.
Yeah, I think so too. Legendary, how are things your side? New week, how are things going with you?
Jim, no rec drinks buys from my side. I am more on the AI shopping spree. After an AI toothbrush, my latest AI acquisition is an AI camera. It's actually for the modern market. It's a pan tilt zoom camera, PTZ camera, that is going to track me when I move around, which I don't really do throughout the show. But if I were to move around, it would track me, it would zoom in on me. I could show things on a whiteboard, which I'm also not doing, but it's apparently a pretty good camera in itself, even without the AI features. I'm quite excited to have that upgrade. Hopefully,
Yeah, I really liked you selling this to me before the start of the show, because you were saying, yeah, when I do my segments, it's going to track me. It's like we sit in the same place for 60 minutes. So I'm looking forward to how active Legendary DeFi on a Thursday is going to become in order to justify this AI camera. What's a little sneak peek to this increased activity, Legendary? You're going to go whiteboard, do you think?
I don't think so, but maybe if I turn around when I grab my drink, it's going to zoom in on my drink, which is probably something I don't want. Or I can do a hand gesture and it's going to zoom in on my face and it's going to be more intense to follow the Legendary DeFi segment. Let's see what we'll do with it.
Interesting. Look, all kinds of fascinating stuff going on in the market, and also generally, I think in general the market is in a not necessarily a precarious position, but it's waiting. It's just waiting for something to happen. Crazy things going on with PNUT over the weekend. Just everything kind of on edge, waiting for the election results as they come out tomorrow. So we'll touch a little bit on that as well. But let's get into the price action. As always, from the snapshot, let's do price action first, then we'll get into the headlines. Starting with Bitcoin. Bitcoin is just flat, to be honest. 68K, no real movement in the majors in the last 24 hours. ETH is up almost 1% too at 2.4K, but it's down a couple of percent in the last 7 days. Solana is flat as well at $164, but in the decline over the weekend, that's now down 7% in the last 7 days. So Bitcoin dominance, as we said, it's kind of just edging up. In the last 7 days, Bitcoin is flat. So Bitcoin is the strongest of the majors. On the meme side of things, there's also been a little bit of a sell-off in general. You had PNUT sell-off, well, almost 50%. Legendary is going to deep dive into that in a little bit. Doge is down 1%. Pepe's down 3%. WIF is down 1%. Popcat's down almost 12%. Bonk is down a couple of percent. Basically, everything is red apart from Giga, which is up 1%. Goat, which is up 10% back to 50 cents. And Frog. Frog is up 13% at 30 cents. Up 40% in the last 7 days. So that is clearly one of the better performing memes at the moment, whereas the rest of the stuff is mostly red on that side of things. Getting into the headlines themselves, you've got Bitcoin dominance rising to 60%. Legendary trader Cobie tweeted, he doesn't tweet very often anymore, usually just as a reply guy, it said Bitcoin to over 100K, doesn't matter who wins, probably just impacts how quickly it happens and where else we go on the journey. We'll be discussing that in just a little bit. Next, Switzerland's largest bank, UBS, launches the world's first Ethereum-based tokenized fund. UBS explained that token holders will be able to leverage its institutional-grade cash management solutions, which rely on high-quality money markets and are structured around a conservative risk-managed framework. I've got some big thoughts on that, actually, which I'll explain when we do that segment a little bit later. And then finally, PNUT drops almost 50% after running up to $100 million over the weekend after a series of Elon tweets. Some notable sales from around the space. Microsoft Office Eternal Suffering. This is a fun one. Die with most likes, selling for 16.9 ETH. This is his Genesis piece. Very cool. Bored Ape Spacesuit selling for 20.1 ETH, and a CryptoPunk Medical Mask selling for 25.5 ETH. CryptoPunk's floor has been sliding, actually, back down to like that 25-ish ETH region. That's the price action and the headlines. Legendary, should we head over to NFT market to see what's going on there?
Yeah, let's do it. NFT market's looking pretty weak to pretty flat. Bored Apes sitting at a 10.5 ETH floor, basically unchanged over the last 24 hours, however, down 10% over the last 7 days. Pudgy Penguins down another 2%, 8.3 ETH floor for them, down 7% over the last 7 days. Azuki's down 2%, 4.78 ETH floor for them, only down 1% over the last 7 days. So definitely out of the big three ones, the most stable collection. Miladies are flat, still up 2% over the last 7 days, though, and sitting at a 4.28 floor. However, they did pump significantly above that and have also corrected down. Only real green collection over the last 24 hours that is more of the significant ones is this Proto Gremlins one, up 9%, 2.6 ETH floor for them. However, also down 11% over the last 7 days. So rather flat to red week for NFTs in general.
Like it. Great summary of the NFT market. The rest of the space, let's hit the rest of the news. Coinbase and Binance involved in accusations of extortionate listing fees. Coinbase CEO responds saying that the Coinbase listings are free. Binance say if coins do not pass listing process, they cannot be listed. So both kind of rejecting the idea that they're charging extortionate fees. We're going to actually be discussing that in just a few minutes to get into the details there. Different people are saying different things. It's pretty important for token listings to know what the process is and understand what is going to happen to our bags. Tether announces launch of the dirham-pegged stablecoin on TON. VanEck predict Bitcoin as a reserve asset by 2050 with price target of $3 million. This was on one of the American the shows over the weekend. Huge price target there. Crypto casino MetaWin loses $4 million in ETH and Solana hack. Rec Drinks sell out 222,000 cans, sorry, in 48 hours via an online sale. That's what me and Sam were referring to earlier. We contributed to that sellout monkeys on Ape Chain, 1,000x from 1 ape to 1,000 ape. A lot of fun happening on the Ape Chain from what I've observed. People really going for like these cheap fun mints and absolutely sending them for huge multiple gains. That's fun to see. And 2 Ether Rocks originate loans totaling $240,000. Again, that's with our partner Gondi, always attracting the best NFT loans at the moment, the premium NFTs always. That's the Web3 roundup. We are going to hit the main discussions and headlines in just a little bit. But before we do that, Legendary, is there anything catching your attention from the other bits around the news?
Yeah, absolutely. Obviously not gonna touch on the listing fees because we're gonna have a separate discussion on that. The thing that I find interesting is Ape Chain, again, very much alive. And you have a very good amount of NFT collections launching there. I am observing that on Kaito, which is this analytics tool that I recently subscribed to, where you track the smart followings and followers of the market. And it used to be just pump.fund tickers and VCs and some more quote unquote serious projects. But now if you go through the market smart followings, there's a very good amount of NFT launches on Ape Chain that people seem to track and seem to have accepted as a new form of pump.fun-esque gamble on NFTs on Ape Chain. So very much a live ecosystem and interesting to see that. Didn't expect the gamble to happen on new NFT collections on Ape Chain, to be completely honest.
It's a good point. Are you going to do anything in particular then, or are you, because we haven't really had a conversation about where we're allocating capital, time. We will be doing that during the course of this week. But how much of your time or capital will get allocated towards Ape Chain as a consequence then, Legendary, or are you focused on other things at the moment?
I got a couple thousand ape on Ape Chain, and from the things that I can mint where I don't need any specific form of whitelist or a whitelist or whatever, in which I see on the analytics dashboard, I just mint a couple and play it along, but nothing where I focus too much time on. It's more like, oh, I just saw that on my dashboard, head over, see if there's a mint upcoming, and mint and just move on.
Fair enough. I think that's, I mean, to give you your credit again, one of the things I know when people are either in this space or actually even new to the space, doesn't matter whether you're new or have been around in the space for quite some time. The thing that gets to people about the space is that there's too many things going on all the time, and it's hard to keep up and it's hard to figure out where to put your attention. And I think what Legendary just described is a really helpful way to approach something new that isn't going to take up all of your time. It's not going to take up all of your focus, but you just do it in a small and manageable way. You don't put so much pressure on yourself to say like, right, I'm going to allocate an unreasonable proportion of my capital into a place where that you can't put all your time. You just say like, right, this is a fun thing that's going on. I do want to explore. I do want to participate in some way. I'm just going to take like a little bit. If I see something, I'll do it. If not, no worries. I think that's just a really smart way to approach all of the various opportunities that are here right now, as well as the more that are going to be coming, right? Because there's going to be more as Blast Season 2 kicks off more. And all of those new products come to market. It's going to be more as Abstract comes to market, and all of the Pudgy Penguin stuff is going to kick off a part of it, as well as all the other bigger chains like Mega ETH and Movement Labs and Bearer Chain. It's just going to be a fiesta of stuff. So get prepared and maybe come up with some strategies. I think that's what I'll be doing personally, and we'll be sharing them as well. Sam, any reflections on that before we get into the kind of the centralized exchange discussion?
Yeah, I think, Legendary touches on a few things around like using tools to find indicators for things popping off. And I think the AI solutions out there are pretty good. But something else I kind of use as an indicator is like venture capital funding. And that's hit a new high the highest since I think early 2022, this last month. So there's a lot of rounds that went through last month. And I suspect that will probably continue. So I think just in terms of an indicator, Cobie's talking about 100K Bitcoin. We're seeing a lot of projects sort of emerging with these funding rounds. And I think a lot of these are going to start pumping out products in the next 6 months. So It'll be interesting to see how that goes. But I think for me, it's like, okay, well, if that's a leading indicator, you got AI solutions that are suggesting the same thing. Cobie's calling for 100K Bitcoin. That's pretty promising stuff. So, and all these structural changes that we'll touch on as well later on, it's pretty bullish for me.
Okay. Definitely going to be analyzing the Bitcoin stuff and the broader market stuff in just a little bit. Circling back to this point about all of these projects launching, lots of tokens coming to market. There was a very interesting discussion taking place on the timeline in the last 48 hours or so, kind of pitting Coinbase and Binance. It wasn't really, no one really did this necessarily, but it was a story that was shared, and it kind of pitted Coinbase and Binance against each other because, let me just find the tweet. There was a tweet by Andre Cronje. I can't pronounce it, but I think he's someone who's been quite prominent in crypto before. I don't know the full history. Sorry, it was this person called Simon who shared the tweet first. They said, I recently spoke with a tier 1 project that raised close to 9 figures. After wasting over a year of due diligence with Binance, they finally received a listing offer, and Binance asked for 15% of their total token supply. He said, imagine paying $50 to $100 million just for that centralized exchange listing. Not only is this unaffordable for projects, but these tokens are the biggest reason for bleeding charts. Something has to change. 2 people responded to this. The CEO of Coinbase, Brian Armstrong, said, asset listings on Coinbase are free. Drop us a note through our asset hub and we'll see if we can help. So obviously the accusation was that Binance are charging too much. Coinbase came in and said, look, by the way, we do it for free. But then 2 people in the comments to the Coinbase tweet suggested otherwise. Andre said Binance charged us $0, whereas Coinbase has asked us for 300 million, 50 million, 30 million, and more recently 60 million. And Justin Sun actually replied beneath that tweet saying exactly the same situation with us. Binance charged us $0. Coinbase required us to pay $500 million. So I don't know 100% what to believe here. You obviously have one person saying that Binance is charging too much, Coinbase coming back saying we don't charge anything, and then a few people saying that that's not specifically true. The more interesting take that I want to put to the floor and hear your thoughts on is this take by Flood, which was one of the comments, because I think it's very, very easy to criticize these centralized exchanges, and everyone wants to go after the centralized. They're the big boys. They're the ones who are the gatekeepers. And if they don't let you in, you don't get to make money. And then you get very angry, right? And everyone likes to be able to punch upwards at the people who are kind of gatekeeping in that respect. But think about it from this perspective. Flood tweeted this. He said, let's put it in a simpler way. These founders want to sell their worthless token loosely associated with a company that makes no money to unsuspecting retail. Binance doesn't like this, and maybe other centralized exchanges don't like that, and wants to have the lifetime value of their accounts not get pillaged by inflationary vapor. So they extract a pound of flesh and give it all away via Binance Launchpad to BNB holders. Explain to me why this is a bad thing. If you want Binance's distribution, you will need to pay for it. The more that I thought about it, the more I agreed with this take, which is, look, if you want to access the distribution, there are all kinds of tokens coming to market, right? And if you think about what proportion of tokens are going to be exceptionally successful, the answer will be very, very few, which means that Binance is perfectly within its right to have a very, very high bar, maybe for the best tokens, which they can evaluate in their own way. They can take a smaller tax because they can feel more confident. And if they think that your token is going to be further down the risk curve, and there's a greater chance that either their holders get wrecked by participating in it, or they don't see the value in it because it's not as good a product, not as good a community, not as good a token, then they can take a higher tax. I think that's actually pretty fair. And I think it's actually quite entitled for people to think that the centralized exchange should extend their huge distribution network without taking anything from them, especially if what you have built is complete vaporware, and which there's, not saying any names in this case, but there are many examples, absolutely many examples where that is the case. So that's my take. Legendary, coming to you first, then want to hear from Sam. What do you think?
Yeah, a couple thoughts on that. First of all, none of these exchanges are non-profit organizations, so obviously they will charge fees, and these fees will change. And seen that from another exchange where I can't disclose the name of it, that basically kept increasing fees as more and more gaming tokens launched and other tokens launched, and they still keep increasing them and keep finding very interesting ways to take even more tokens to, on the one hand, distribute to the community, on the other hand, also have listing fees that where they profit from. And also, yes, with Binance and Coinbase, you get a massive amount of distribution. But also, if you look at say all of the Binance launchpool tokens that launched, CryptoRank has a nice list of them, which I'm sharing on screen. You look at the year to date.
This is great.
You look at the 6-month performance of them, you will see that SUI is up 72%, but say Ethena, Pendle, Meme, EtherFi, Avo down 80%, Manta, Galaxy, Altlayer, Saga, all of them except for one basically are down over the last 6 months. Okay, two.
Wow.
There's two which are up. So yes, you get the distribution, but also neither Binance nor Coinbase are a fix for either shitty tokenomics, lack of demand, changing market interest, sell pressure from investors, sell pressure from retail. Nothing's going to fix that. So you pay for the initial distribution, you pay to be able to flex that you are listed on Coinbase or Binance, but in the long run, if your token goes down, it goes down, and neither Binance nor Coinbase can save you from that.
Very, very helpful additional statistics. Thanks for sharing that, Legendary. Sam, what do you think here on the general point? And then second, then, do you think that people will move away? Because look, in the same way that centralized exchanges are allowed to say, look, this is the tax, it's 15%, you can pay it or not. Do you think people have finally got to the point where like, look, we just can't pay that. We will look at alternative options. We'll look at decentralized exchange listings. We'll seek alternative options. Maybe we'll go fully liquid instead of bothering with any of this stuff anyway. What do you think the solution is here?
Just so the second point first, I think that ultimately, it's a business decision. I think Binance is trying to manage its risk. Ultimately, yes. If you do have the reputational risk, you have like risk around pricing, all these kind of things play into it. I think that ultimately it's up to Binance whether it includes in its distribution model. So I think that like they can charge whatever they want, and they're fully aware that a lot of these bit like protocols are probably going to say no, this is too expensive, but they got themselves into a position where they can do that. So I think like if you look at the origin story of Binance, they listed a lot more tokens than Coinbase and effectively broke into market share from doing that. So I think they've taken a long time to get to this point. They've worked at it. Like ultimately, it's up to them if they want to charge X price, and then it's up to these protocols whether they decide to not pay it. And there are plenty of other listings, other exchanges that they can list on, whether those are tier 2 exchanges or even Coinbase is an alternative tier 1. But yeah, at the end of the day, it comes down to negotiation. If Binance sees them as a high risk, they'll charge a higher fee, and I think that's perfectly fine to do that.
Yeah, I've got one point, maybe just to provide a bit of a pushback on the concept of exchanges. I don't want to sound too pro centralized exchanges, but I think in this point that like they're perfectly within their rights to push. This is a tweet from Mo, who is the friend of the show and head of tokenomics at Animoca. He even said exchanges hold too much power, and the percentage of advisory tokens they ask for and vanity metrics to list is unsustainable. It also led us through the airdrop meta that we experienced first half of this year. It's a broken cycle. The exchanges win, projects get hurt, price tanks, and any positive momentum is dead in the water. Bullish on DEX listings moving forward. I find that super interesting. But my follow-up to that is, in the end, I mean, we talk about this when it comes to trading, whether it's memes, whether it's riskier stuff, whether it's anything. In the end, when it comes to trading, you're the one pressing the button. If you're the founder of the project and you think that the deal has become too bad and it's going to hurt you, it's not the exchange hurting you by you taking the deal. Like you're putting the deal is on the table and you sign the deal, so you are hurting your project. It's like us trying to sign a partnership and then me thinking that the other partner, whether that's a media partner or some other type of partner, is giving us a bad deal, and then me signing the deal and then me blaming the person for signing the bad deal. Like, you have to take open agency over this and make sure that you're in charge of the future of your project. So I think that's the thing. I do think to kind of close off, there are some things going on with exchanges where there are like some pretty popular memes sometimes, which you would think this should 100% be listed by now. Like, really, really, it should be listed. Like, what's going on? Are they waiting for a payment? Like, that I would put a question mark against, because you would just assume it would be in their interest to list it, because then they can get some of the fees. But I don't know what's going on. So that's my question mark against it. But I'm just super pro founders of projects taking agency over their projects and not thinking that the centralized exchange is going to save you. Sam?
Yeah, just to that point as well around regulation. I think that ultimately, as crypto becomes more mainstream, I think you probably will have these regulations that come in and look at the listing processes and say, okay, well, what is right and wrong about this process? Can we change it? Can we make it more equitable? Is there some sort of manipulation going on? And I think once the tire's been kicked on that, I think that could potentially change. But I mean, at the moment, there's just a few tier one exchanges that can kind of monopolize or oligopolize the market. So I think that could potentially change as it becomes more mainstream. But yeah, until then, I think they pretty much have a lot of power.
Okay. Like it, Legendary. Unless you've got anything else to say, which you can do here, lead us into the next segment when you're ready.
Yeah, absolutely. Nothing to add to that. So let's jump into the first main headline. We said it at the top of the show. Cobie, the legendary trader, is calling for 100K BTC no matter the election outcome, and sharing the post on screen saying, after a long hiatus of posts, exactly that. Doesn't matter who wins, probably just impacts how quickly it happens and where else we go on the journey. Also, as you mentioned before, BTC dominance is increasing. I'm sharing a trading view chart on screen where you can see that actually Bitcoin dominance bottomed in August 2022, where it hit 39%, and ever since it has been climbing pretty steadily.
Wow.
And now managed to reclaim that 60% dominance share at the expense of ETH, which at the same rate from around 20-ish% has been steadily declining, and it has hit 13% dominance now. The others, USDT, BNB, Solana, don't really matter too much in that dominance chart that is. But also what's important and interesting to see is that we go back even further, that BTC dominance used to be pretty high, and we used to see, for example, in December 2020, BTC dominance at 70%, which is also a figure that I've seen traders on the timeline like Beanie calling for, that BTC will have a good chance to get extra attention after the election and to reclaim that high level. There's also an interesting article on CoinDesk that is actually underlining what Cobie said, saying that doesn't matter who wins the election. If we go back in history, obviously past performance does not equate future performance. We can't extrapolate from that. We can just look at past patterns. If we look at that on screen, we can basically see that in the 4 years after each election, BTC moved up significantly, although the absolute gain, the relative gain, it got smaller and smaller and smaller. And that's probably also where I would side with my own opinion, my own take on that. I think it doesn't matter who wins the election for the BTC price. If Kamala wins and if there's like a bit of a bearish momentum and a sell-off, that's actually a momentum that I would like to buy into, not financial advice on that. And I probably would think that if Trump wins, we won't see this little dip. We could see one with Kamala. It's one that I would like to buy, but I think that it's up and to the right, and the election winner doesn't impact that over the next 4 years. Might have a short-term impact, but not in the mid to long term.
Very interesting. I haven't seen those Bitcoin dominance charts, or I hadn't looked at them as far back as 2021 and saw how far we'd dipped from there, and we're kind of working our way back to that almost 70% Bitcoin dominance, which was super interesting. Thanks for sharing that. Sam, interested to hear your thoughts. Obviously, election stuff, election results will be coming out tomorrow at some point in time. The general consensus perspective seems to be it doesn't matter who wins, but Kamala would be, short-term bearish or short-term stalling, maybe that would be the best way to describe it. Whereas a Trump win might just, let the horse out. What's your perspective here? What are you thinking?
Well, I think there's probably going to be short-term volatility. I have no idea which way it's going to go, to be honest. I think the structural changes that are being put in place are not going to go away once either of them gets into power. Ultimately, it's decentralized. It goes beyond borders. I think worst case scenario, if they do heavily, if say Kamala Harris gets in and it is anti-crypto, then it just means there's going to be brain drain. So people will leave the US. I think ultimately this tech is here for the long haul. So I think bullish price action, medium to long term, expect volatility in the short term, but I have no idea which way it's going to go, to be honest. I'm just going to buy, spot and hold.
Okay, fair enough. The one thing I wanted to add to this conversation, which was helpfully articulated by Cobie in one of his comments, that the one question mark I had, which is like maybe a more contrarian position, was that I actually think in some ways a Democratic win would be more bullish, because at least in what they've said, now obviously there's a bunch of assumptions here, at least in what the Republican Party have said, especially via Elon and the the Department of Government Efficiency, the Doge Club, whatever they're about to set up, the intent would be to actually cut stuff. And the intent would be to say, look, this debt is completely out of control. Everyone knows it, and we're actually going to do something about it. Now, I'm very well aware that both sides have proposed various measures that are incredibly inflationary, and both kind of outlooks would be inflationary. Although the Republicans do have this aspect where there's Elon potentially involved, and he's going to take a sword out and just start chopping different agency branches down to try to make them more efficient. Now, in that scenario, you obviously become more efficient. You try to deal with the debt, and given that the market is forward-looking, the question would be, well, would Bitcoin is that bullish for your crypto? Is it bullish for your crypto for the US to actually deal with its problems? That was the question I was posing to myself, because if it actually, the whole point, one of the big bets on this stuff is that no one's going to deal with it ever, so everything just keeps inflating. But if they actually dealt with it, what would happen? That's the exact question that Tolly, the founder of Solana, asked underneath Cobie's tweet. He asked, what if they cut the budget by 5 times and started paying off the debt? Cobie had this to say. I'm going to share it on the screen for the people who are watching in, and I'll read it out for the people who are listening. Again, the question was, what if they cut the budget by 5x and start paying off the debt? Cobie said this: depression, no budget for the administrator class, mass deregulation, unemployment 25%, treasury liquidity disappears, trade deficit up, dollar up, gold up, US credit rating ironically down, increase of poverty rate, weaker military, local economic systems develop, and trust in established economic system fails. Social unrest leads to rise of militias and extremist groups. Voter priorities return to restoring financial stability. And Bitcoin to 100,000. So in his position, not only does it not matter who wins, even when it comes to policy and it comes to, well, what are you actually going to do about the budget? Whether you deal with it, whether you don't deal with it, I guess the position is, even if you attempted to deal with it, it would have such great ramifications on the economy because it's in such a weak position that it's still going to go. So that I found a very interesting conversation that happened. So glad we're able to share that. Legendary, maybe some final reflections on that as we've had that conversation.
Yeah, absolutely.
Funky.
That conversation continued, and Josh Nomics pointed out perfectly that this conclusion assumes that most of what the government is spending on is useful. Strategic cutting of the crony capitalism that got us into this mess in the first place. And Cobie did reply to that he was just memeing for X, and he didn't really think that through. So take that line of thought with a pinch of salt.
Very good. Funky, your hand is raised, resident Bitcoin expert. What are your thoughts on this? This is obviously a bit of a bigger, yes, it's about Bitcoin, also about the elections, also about policy as it relates to the debt crisis and how it continues to spiral in the States. What is your thinking here?
GM gang, yeah, I'm going to wear more my political correspondent hat for this one. This is something that, I think you guys have already touched on the most important highlights. I've said it for a long time. I don't think it really matters in terms of who's going to win because both of them are going to spend money. I find it laughable, this idea that they would actually somehow wrangle the budget and get it under control because we have a spending problem. We don't have a budget problem. They're just going to keep printing money. At the end of the day, we have not had a budget surplus since Bill Clinton when it was in office. And this is when I was a very young voter. When he handed it off to George W. Bush, that was the last time, and probably the last time we will ever see a budget surplus in American history. Because even if they were to get to a balanced budget, which the Republicans are always going to claim, it still means spending more money. They're always going to inflate the number, whatever it may be. I don't see them paying off any kind of debt. Maybe the good thing is if Trump were to win on Tuesday night, resoundingly, I think we're going to see God candles immediately. I think that we're going to, if there is any talk about paying off the budget, maybe it's part of the whole having the strategic Bitcoin reserve. I know you've watched Michael Saylor's keynote and talking about how this could be done to actually pay off the debt. But the one thing I wanted to reiterate, because I believe I said it once before on the show, was that in my work with the ARC blockchain ecosystem, going to all these blockchain association meetings, they are in direct contact with the Harris policy part of the team. And they have said that to the blockchain association, this is a California politician who has always been tech forward. They said that she should be more overt in her, pledging to uphold the digital asset industry, because that would probably win over some voters who are maybe on the fence, especially single issue voters who are just interested in crypto. But they're not willing to go against existing West Wing policies, was the quote at the time, because they don't want to sort of ruffle the feathers of the Biden administration. But it seems as if they're indicating behind closed doors that they would be very pro-crypto. What that looks like if she were to win, who knows? I think I'm just, like everybody else at this point, I'm just over all the political ads. I can't wait for the election to be over, and let's see what happens Wednesday morning.
Let's see. Very interesting stuff. Appreciate the additional insight there, Funky, from being on the ground in some of those conversations. Look, I think that's probably enough on that. We will obviously be talking about it next couple of days, probably more than we would ordinarily. And then hopefully it will be a thing of the past and we can just get back to Bitcoin on its journey to 100K. Look, the second big headline for the day was UBS launching the world's first Ethereum-based tokenized fund. I've got some big thoughts on this, but I'm going to pass to Sammy, who's going to give us a little bit of breakdown of what's going on here.
Yeah, so there's a couple of points. I think so UBS Asset Management, they've launched their first tokenized investment fund. So UBS USD Money Market Investment Fund Token, abbreviated to UMINT. So it reminds me of the whole Biddle thing with BlackRock. It feels like they're kind of in touch with tokenization, Web3 terminology, which is quite interesting. But that too is built on Ethereum. So we're seeing, as Ledge mentioned earlier, around like the Bitcoin dominance and Ethereum kind of sliding. There is still a lot of innovation happening, and things are being tokenized on ETH, which is that programmable money. So that to me is an interesting trend to watch. The institutions seem to be adopting that. That's available to its authorized distribution partners and offers institutional grade cash management solutions grounded in a risk management framework. So it's probably going to be regulatory compliant. And just in terms of UBS generally, I mean, they're the biggest Swiss bank. They kind of came to Credit Suisse's saving last year when that whole thing blew up. And I think it could be an indicator of what's to come. There's a lot of funds in the market that are being tokenized. You've got BlackRock Biddle, you got Franklin Templeton deployed one on Base recently as well. So there's a number of them that are kind of kicking off. I know JP Morgan, they've got Onyx, which is tokenizing securities, so bonds, stocks, putting that on chain. So it's happening, innovation is happening. And I think this is just an indicator of the direction that it's going to continue to go. Just in the context of sort of broader analysis of the market, I think, Ledge, if you just want to bring up the BCG insights. So they produced a report back in 2022 and spoke about the tokenization, the market cap of tokenized assets globally. They conservatively estimated this is going to hit 16 trillion by 2030. And you can see on that chart already, like, I think it's going to blow way past that. I mean, the Biddle fund alone is like $500 million. You've got, I think the Franklin Templeton's up to like 300 and something million. So you're looking at $1 billion for that alone, let alone all these other classes of assets that are going to be brought on chain. So I think this is pretty conservative. And what surprised me, so if you go to the next one, so McKinsey did kind of a counter analysis of this, and they were like, okay, well, BCG have come in at 16 trillion. We actually think it's just going to be 2 trillion by 2030, which I think is laughable because that is such a small amount. That's like pretty much what the total crypto market cap is today. But you're kind of forecasting 5 to 6 years from now. And I think the rate of us adopting the blockchain is pretty insane. So I think for me, this was, I was curious as to why they even put this. I think it's pretty low. And I actually think that BCG's best case estimate, they were looking at, I think it was 68 trillion, which I think is probably more realistic. If you think about the size of these other markets that they could effectively bring on chain in the next 5 to 10 years, I think that's probably the direction it's going to go, and probably a more realistic estimation.
Interesting. One of the really interesting things I've been thinking about, I was watching the All In podcast over the weekend, and they were talking about broad declining demand in US treasuries. Like a lot of other countries have been selling off their treasury position, or they've been wanting to decrease their exposure to US treasuries. And I think this is one of the odd scenarios, and it happens exactly the same with stablecoins. Actually, you think that the dollar is in decline in some way, and it's like, it's, everything's, Bitcoin, everything should move towards being bullish on Bitcoin. And yes, in some ways that is true, because I think Bitcoin continues to rise up. But the fact that USDC and stablecoins can proliferate around the world actually is bullish for the dollar, because it creates demand in the exact same way. By getting US treasuries on chain, it just makes it easier for anyone else to have the option to get into US treasuries when they ordinarily wouldn't have been able to do that. So I think from that perspective, it's super important for this stuff to happen. But then the one question I have, maybe Legendary, you can take this and you can comment on whatever you want as well. But at the moment, the majority of these funds seem to be thinking, right, look, what's in the real world? Let's just put it on chain, and let's invest in the real world, but let's do it on chain. One of the things we've been talking about is a fund which allows people in the real world to invest in things that are on chain, that are native. Like, instead of putting your money in stocks but on chain, why don't you put your money in crypto native protocols that are generating a particular yield, and put it in that type of fund? Because that seems to be beating traditional performance. That is literally how we have been outperforming the market over the last 6 to 12 months, by putting our capital in crypto native protocols and outperforming everyone. And that's what we're kind of planning and thinking on, how to be able to execute that on a bigger scale. What's your thought on that, and maybe any other comments you have on this segment?
Yeah, absolutely. First, to your question, to your thought, I think it's still broadly viewed as something that's not really trustworthy to put your money into crypto.
Sure.
I like all the finance Reddits to basically read on them. The typical story there goes, if someone is new then shows up, there's an inheritance. Yesterday I read a thread, someone made $1 million from whatever distant family member dying. And everyone's like, buy the S&P 500, buy MSCI World. Someone was making a point, add like maybe 5% Bitcoin, and everyone was jumping, and then we're like, you're insane. This is a scam. Don't do that. And then, for example, they were like, oh, but you can buy Hyundai because Hyundai is owning what are the Boston Dynamics, the robots that have been trending whenever they have a new robot dog that they're presenting, and robotics is the future, and you can take a bet on robotics by buying Hyundai. So they'd much rather have someone buy a single stock to take additional risk than investing in an alternative asset class. So this is like still the line of thinking is buy ETFs, ignore real estate, ignore the scam that crypto is. And I feel like this still is a reservation that holds broadly, and we're still inside a circle, inside a bubble where we obviously view things differently. The second thing that I want to touch on, because I found it interesting as well, what Sammy commented on, that McKinsey is taking such a conservative estimate because their base case is 2 trillion. The range from negative, the base case is 2 trillion. Yeah. The range from negative to best case is $1 to $4 trillion for the market cap of tokenized assets. And basically the methodology that they applied to that is they looked at credit cards and ETFs and their initial annual growth rates. Their initial CAGR was 100%. and then slowed down to 50% after a couple of years. And they kind of assumed that mean figure of 75% that they compounded up to 2030. And this is where I arrived to that. So even McKinsey in this like framework is just treating it as a financial innovation, but not as something that could be a totally new asset class. Although ETFs kind of have been a new asset class. I mean, they're bundling existing asset classes, but they're still in this line of thinking. It's more an innovation like a credit card, and it's not something that could be basically a parallel financial system. So this is why their estimate is a bit more on the conservative side. And they are not alone with that. Citibank and others see a very similar range of figures for that. So if anything, BCG are the bullish ones in that, and the rest seems to be a bit more conservative.
I think that feeds into kind of what I was saying. When you said a parallel ecosystem, that's what I'm saying. It's like, it's actually, I know some people get excited about bringing the real world on chain. I'm actually less excited about that because that's just more of the same, and the execution takes place in a different place. Like, I'm more excited in the building and construction of the parallel ecosystem, which has actually innovated on what came before and is making it better in particular ways. Yes, it's riskier. Yes, there's also crazy and stupid stuff that happens here, as well as all part of that mix of like trying to be a little bit revolutionary and trying to figure out a new way to do things. But the hope is, the bet is that in that innovation and in that revolution, there's something better that is native to crypto versus just taking what happened somewhere and putting it on chain. That's not what I'm super excited about forever moving forward. Sam, final reflections on this section before we move on.
I'm going to actually take the counter here. I'm actually excited about stuff coming on chain. I think it comes back from my accounting roots. It's like, historically, you have these centralized ledgers that could be literally just ripped apart. Fraud was like so prevalent. This is arguably just better tech, and distributed ledger technology, which is what blockchain is just a better way of recording assets. So I think bringing stocks, bonds, stuff like that on chain, whether it's private or public blockchains, I think is pretty bullish. And I can't see a way where this is going to go backwards. Like, I think private centralized databases are just going to be a thing of the past. Blockchain is going to be integrated into absolutely everything. And that just means that the tokenized market cap of whatever is going to be put on chain is going to go through the roof. It's going to be like, in 50 years time, everything's going to be on chain. That's just the way it's going to be. And I can't see why that would kind of go backwards unless you have some sort of supercomputer that can completely undermine blockchain. But I think you've then got a bigger thing to worry about. So I think that's the direction that I think it's going to go. And I think that's why I'm bullish about things coming on chain.
Yeah, I do not disagree with that direction of travel. That is the direction of travel. Everything will be brought on chain. I'm wondering from a fund perspective, why invest in the old world? Like, if the investing environment is trying to think about like what we want to, well, it depends on your risk profile, obviously, but I feel like there's more opportunity investing in the newest stuff and crypto native stuff, and that's obviously what we focus on because we have that risk profile. But completely take your points.
Just on that point, I think, like, if you look at the demographic of the people that have the money, boomers have the money. They're concerned about like this stuff that they just don't know about. So there's just not the appetite, and I don't think that traditional businesses are going to be willing to deploy significant amounts of capital to then appeal to the minority. So I think it's going to be a transition point over time, and I think that's probably the main driver as to why you've got that distinction in investor appetite.
Agree. I think it will take time. It will take maybe a few years, maybe even more than that, of proof from various funds that you can outperform by investing in crypto native stuff. And this is moving away from just VC stuff. Yes, certain crypto VC firms have done wild things as well in the last decade or so. But very, very interesting conversation. Glad we had it. We've only got 5 minutes left today, which is wonderful for the final segment, which Legendary is going to take on the PNUT coin. Legendary, what on earth's going on here? I know you were involved a little bit, I believe. What's your take? Why is the PNUT squirrel dying?
Absolutely. PNUT is an internet celebrity, or was an internet celebrity. PNUT is a squirrel that had amassed almost 700,000 followers on Instagram when PNUT was still alive. That figure was around 500K. And what had happened is that apparently there's been people filing for reports complaining that either PNUT is in a potentially unsafe housing, or that there might be a danger of rabies. And what happened is that the Department of Environmental Conservation, the DEC in New York, seized the animal and killed it, also killed a raccoon, Fred, that was located on the same property. And as a response to that, the story trended, got viral. Elon Musk had posted about PNUT and also saying President real Donald Trump will save the squirrels. When Elon Musk put that post out, obviously PNUT coin had existed for a couple of days already. There's been months old PNUT coins at that point, but the basically trenches PvP had already picked the winner, who then, after Elon posted about it, shot up from 4 mil to 100 mil. There's been also a false document that has been shared, a faked statement by Donald Trump, who's been talking to PNUT the squirrel dying, which turned out to be fake news, however. And this is why we've seen, after, as you perfectly said, PNUT dumped from 100 mil to 40-ish mil, seen a little bit of recovery, is that actually JD Vance addressed that and also kind of questioned government priorities and said that Trump is raging about basically PNUT the squirrel being euthanized, being killed. And that also led to more posts by Elon Musk about that. I think another one was where Elon Musk posted this here. There we go. Saying, if you strike me down, I will become more powerful than you could possibly imagine. Obi PNUT Kenobi with an AI generated picture, which led to another coin being created. So quite a lot of madness around PNUT the squirrel. Lots of coins created around that. I think from someone who did a bit of on-chain analysis, that coin made 4 people millionaires who were able to get in with size early enough and also hold through all that craze and then take profits. And as we're speaking right now, PNUT is at a $44 million market cap.
Love it. Such a good breakdown. Appreciate all the details. That was very, very difficult to follow over the weekend as PNUT was on its march to $100 million. Maybe we've only got a couple minutes left, Legendary. I think that summary is perfect in terms of what actually happened, but maybe some thoughts on this new Legendary Trenches arc and how you are trying to participate. I think you might have shared it before, but it might be helpful again. I think you might have got involved in PNUT at some point in time as well. Like, how are you catching these things early, if at all? What's your strategy at the moment? What are you finding helpful? How's it going for you in the deepest of trenches here at the moment?
Yeah, I did top blast PNUT because actually Oxy brought it to my attention, who got in, I think, at 300K market cap or whatever. What I'm doing tool-wise, that maybe might be the more interesting thing than an individual play, is there's a set amount of X profiles, posters, KOLs that I track, basically for whatever they're posting. I have a feed with their posts running. I have a smart wallet tracker. You could see it in particular with PNUT, that some of the wallets who've been early to PNUT and have made significant gains of that were also wallets who've been early to GOAT, so who are apparently having a very good system of monitoring the news and kind of estimating what could go viral. And also, if you look at those wallets, it's important to not just go by the P&L, because you will have degens who gamble on everything, but people make more or allegedly smarter decisions. So the smart wallets is something that I also track. Then the third thing I have a look at is the timeline sentiment and how holders are evolving. You will get a good feeling for a solid holder number for a certain token size. That was kind of the case with Luce, the meme of the mascot of the Vatican, which was turned into a meme that had a very strong amount of holders for the 5 to 10 mil market cap where it was. After that, it exploded. So this is the thing that I'm tracking, and this is the thing where I'm good at. The thing where I'm not as good at is to get a feeling for when PNUT is retracing. I did buy in at 4 mil. I sold along the way on the top, and I did buy the dip because I think it might go up again. It doesn't look like it's doing that currently. So this is the thing where I still need to learn a bit more, is to kind of understand how those retracements work and which tokens will come back or which tokens won't come back.
Fair enough. Really helpful analysis and kind of personal insight there. Final question, Legendary. Which are the applications that you are enjoying the most? You mentioned Kaito. Is that the main one you're using? Anything else you want to shout out that might be helpful for people kind of on their trading journey?
Honestly, Kaito, if you just want to trade memes, is too expensive because Kaito is 1K a month. Chain Edge is one that I like. Chain Edge is, I think, 100-ish. It's not a lot of people talk about it, but it's pretty good to filter those smart wallets, and I found that to be tremendously helpful.
Love it. Okay. Super helpful stuff. Great to be able to share some of that personal insight as well as some of the applications we're finding helpful. Navigating this space, as always, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour. We're live on X video, X Spaces, and YouTube video too. You can catch up with us on Spotify and Apple Podcasts too, if that is how you prefer to consume your media. Guys, that was a great show. Thanks so much for joining us. Have a wonderful day. Take care, and we will be back with you tomorrow. Bye-bye.